Hello and welcome to the market update from 6th of May to 10th of May 2024. This video has been divided into two parts. The first part will discuss about the global economy and the Indian economy, and then we'll move to the second part. We'll discuss about the markets in the last week. So starting with the global economy, China came out with their PMI number on the services. The services purchasing managers index eased to 52.5 from 52.7 in the month of March. Remaining in an expansionary territory for the 16th straight month. The last reported manufacturing PMI number was also in 51.4. So this shows that the Chinese economy on the PMI number is in the expansionary phase as of now, because number above 50 indicates that. China export has also increased by 1.5% in dollar terms from the year earlier. Even the Chinese April crude oil import has risen by 5.45%. 4.5%. On the other hand, the US weekly jobless claim had increased more than expected, which is a good news in terms of that the Fed was waiting for this jobless claim number to increase. Only then it would give them an indication that there's a problem in the economy and that they need to decrease the rate of interest. On the other side, the UK economy, in the UK economy, the Bank of England kept the interest rates unchanged. The interest rate is at the 16-year high of 5.25%. The UK economy also expanded by 0.6% in the first 3 months of this year, which was followed by 2 successive quarters of contraction in the second half of the 2023, which was leading to news that the UK might go into a recession. But they had exited this recession option and they had started to expand by 0.6% in the first 3 months of this year. Now moving on to US 10-year Treasury bond yield. If we look at the US Treasury bond yield for the week, it cooled down to it started to cool down, but ended at 4.5%, which was the number last week. So still the US Treasury bond are trading at a higher rate. If we move to the equity markets, how the equity markets in the world have performed, we see that the American market or the US market was positive, close to 1.8 to 2%. The Dow Jones was 2.16, S&P 500 was 1.85, Nasdaq was 1.14%. The European market was also up by 2.5 to 4%. Whereas on the Asian market saw a mixed result. The Indian market's GIFT Nifty was down by 2.81%. I think this was more cause of the election season going on. The Nikkei was down by 1.5%. The Singapore Straits Times was flat. Whereas the other markets, the Hong Kong market, Taiwanese market was slightly in a positive zone. If we look at the oil prices traded at $82.78 a barrel, which was the price last week. The FIS and DIS, if we look for the weekly data, the FIS were net seller by 21,619.05 CR. This heavy selling is attributed not only to just the rising the rising US bond yields, but the interest in the Chinese market. As we see that Chinese markets, the valuations are very attractive and they have started to grow now. The DIS bought close to 17,367 crore worth of equities in the week. If we look at the gold prices, pardon the mistake here. It was up by 2.61% and closed at 72,525 per 10 grams for the week. India came out with their IIP March numbers. If we look at the data, the IIP was moderated to 4.9, which was 5.6% in the month of February as compared to the last year. The manufacturing index, however, saw a growth of 5.2% year on year. On the consumption side, the consumer durable production rose by 9.5, which gives a boost to the economy. that the manufacturers are currently very positive on the side that the people would start buying consumer durables. On the infrastructure side and the construction side, the construction goods side, the IIP number was 6.9%, given by the guidance, given the interest of the government to increase all the. So this was on the economic side for the global and the Indian perspective. Thank you for joining me. Do share, subscribe, like my video so that you could get updates every week. Thank you.